Hey folks, welcome to InTheMoneyStocks.com's live trading action video. My name is Gareth Soloway, Chief Market Strategist here. Today's date is Tuesday, June 30th, 2015. Last day of the second quarter. That means earnings starting next week with Alcoa on Wednesday and then lots to follow. Going to be fun, folks. All right, let's get into the action on the charts. I want to start with the S&P 500, which is bouncing off the lows of the day. Basically, the flat line was where we were at the lows of the day, where we closed yesterday, a beautiful double bottom. Now, a lot of people thought we might continue to see some downside in the markets. I did not, and I want to show you why. We're going to cover a bunch of different things today, including multiple stocks, but let's start with the S&P 500. You're looking at the SPY, which is the ETF that tracks the S&P 500. Markets, again, bouncing off their lows here after retesting that double bottom. Notice this trend line here. I want to show you why I knew this would be a bounce play today. All right, if we zoom out on the chart, check this out, guys, and what I need to do is just expand my chart a little bit here, and we're going to go to the 120 day on the 60-minute, and you can see this trend line stretching back, and look at this. See this pivot low right here, which matches right through here? Major support right there, and you can see that there's some support there. So that's just one factor. You never base a decision of a bounce or a pullback off one factor, but it's one thing to put in your basket. Now you want to find a secondary reasoning behind it. All right, go to your daily chart. Look at this. All right, yesterday we fell multiple days, 1, 2, 3, 4, 5 days straight, the biggest of the last day on heavy volume into the 200 moving average. All right, 200 MA has not been hit in a long time. What that tells us is there's a high likelihood of a bounce off of that. All right, when you haven't hit a major level in a long period of time and you finally hit it on a major drop, especially on heavy volume, it tells you that there's likelihood of a short-term bounce. Now, it doesn't necessarily mean we're going to bounce over the next, 3-4 weeks. I mean, we could head lower in a week's time, but it tells you short-term you're going to get a bounce. Also, when you close at the lows of the day like we did yesterday, the low of the day close gets a lot of amateurs very scared. When amateurs get scared, they do irrational, emotional things. You actually see the market go in the opposite direction of that fear, which in this case is a little bit of a bounce. So again, notice the market bouncing off of that beautifully here back to the upside. In addition, there's going to be, because of the market freaking out yesterday, there's going to be more push to have a resolution with Greece. You're going to see that happen very likely. So again, all these things are just building up short term for a potential for a bounce. So that's the spiders, that's the S&P 500. I'm in the camp that we see a 1 to 2 day bounce, maybe even into the 4-day weekend, the 3-day holiday weekend. And again, notice how we're rallying up here into the 50 MA short-term resistance. You get through this 50 today and there's a breakout. All right, you were higher here, but you were never above the 50 moving average intraday on the 10-minute chart. So that would be something we would watch as well. One of the stocks that I'm very bullish on right now is something that most people are bearish on. It's Micron Technologies, intraday breaking out above the 50 MA. Look at how long it's been below the 50. You haven't been above the 50 in a long time. This should close above the 50. It should set it free tomorrow. I see upside back to $20 within a day or two. All right, take a look at the daily chart. This is even more important. Look at the daily chart here. See this pivot low, this pivot high right here? So you haven't, look at the fall we've had from $36, $37 down to basically $18.50 today. That's a huge drop. I mean, we're talking about a 50% retrace from this high, from zero up and then a pullback from that level. Basically, this is a 50% retrace, right? 18 plus 18 is 36, so 18.5 plus 18, that'll be about 37. That's basically the highs up here. So you've got a 50% retrace on the chart. In addition, take a look at this pivot high. Put a trend line right here. Look at what it hits. We pierced it today. We're now bouncing back. You also have this little minor pivot. Let me just show you on a zoom back here so I can just show you exactly. Here's your pivot high right here I just showed you, and look at that little pivot low. You broke out. You confirmed this was a retrace, and then we went higher. That means when you come back into it, there's a high likelihood of a bounce, and that is what we are getting today. Not a big bounce, but it's the start, right? You have to find a bottom in a chart. You have to start to kind of grow higher on these things. So very nice move there. Wynn Resorts, take a look at Wynn today, having a very strong move. This chart is extremely oversold. Chart is already bouncing significantly, so I'm not going to be a chaser here. But I do think, again, any sort of pullbacks on Wynn down to about the high 80s to mid 80s is going to be an unbelievably big opportunity to buy. I do think at some point in the next couple months we will go there, not because Wynn is weak, but because the market should get weak. So my projections are short-term bounce. And again, that bounce could last 1 to 2 weeks, and then I think you're going to start to see major weakness again. All right, one of my favorite stocks that I'm shocked hasn't bounced yet continues to be Chesapeake down here. This should take us back to a $13 target. Here's your pivot low. Look at the extension move here. We have found a bottom on natural gas. Natural gas I'm actually bullish on, and oil is actually having a good day. Now, so far there's no deal with Iran, guys. No deal with Iran. Now, oil's in a precarious position right here because it broke below this upsloping trend line in the moving averages. If oil climbs back above and closes above these moving averages, look for further upside, maybe to the 200. It could coincide with a failed deal with Iran. All right, that's why the market has built in this cushion that there's going to be a lot of Iranian oil on the market. That, if it fails, leaves potential huge upside for oil. Natural gas having bottomed out already, Chesapeake is a likely scenario. Chesapeake was just upgraded yesterday to a buy, as the upgrading firm said there was no reason to see it this low. I think they tagged a price target of $13, which is exactly where I think it's going. And I think you'll actually see that probably in the next 2 to 3 weeks. All right, very likely, very soon, you will see that target. All right, so that's just one more stock I'm watching here, folks. I don't think I'm going to cover any other stocks. I don't want to make this video too long, but I will look to do another one and give you guys some insight on that as well. All right, bottom line is, have a great afternoon, great evening. Come join us at InTheMoneyStocks.com. I just put out a new trade alert to Research Center members, a swing trade that I just bought that has upside of about 15 to 20% in the next couple weeks. I also put out options trades earlier today, 2 of them. And again, you can join the options alerts. So your 2 options are, you have the Research Center, which is swing trade alerts on stocks, obviously, and then you have the options alerts, which is options trades. And these are trades that I'm giving out because I'm taking them, and you can jump in on them, and you get them time-stamped, email, text alerts. Come to InTheMoneyStocks.com and sign up ASAP. All right, guys, take care. Enjoy.